are your expectations out of today's session? Let me just see a few hands. Anyone? What are your expectations?
To understand more, just to understand more about investment. How do you invest? What about the savings? How do you save? The return on investment, maybe you look at the interest rates, inflation, rather affect investments.
Yeah.
That is just as a contribute to the company, but again, as an individual, you need also to invest. Don't eat all part of your salary, but again, looking at the future, I think looking forward to that.
Thank you. Anyone else?
How do I balance the investment, return on investment and capital investment?
Okay, thank you. 3 more.
I think it's an element of getting to learn and know how to go about risk mitigation and diversification of my portfolio.
Okay, awesome.
For me and my company, both for me and my company is to have a draft financial plan, basically building a portfolio that will help my company then when we don't have money, we are afloat.
Yeah.
Yes, but also to unlearn. The problem with us, accountants, finance people, we know too much, so we don't listen to some of these investment plans.
Thank you. One last one.
So I think my colleagues have already wanted also to initiate on our personal finances, but also for us who are in the not-for-profits, we have funds which are for activities, but also on the sustainability aspect, we have those funds that are short-term plus long-term. How do we invest those funds for the funds that we are allowed to invest? And still those cash flows that in the next month the activities are supposed to undertake using the same funds.
Yeah. Thank you very much. The late Dr. Chris Kirubi used to tell me something very interesting. He used to say, buyers, you know how you remember how he used to speak, Buyers, if you follow the bee, you'll find the honey. If you follow the bee, you'll find and it was a parable he kept using, and he meant if you follow companies that have good cash flows, you'll find the best investments. Yeah? When companies collapse, why do they collapse? Because of? When companies succeed, they succeed because of? But think about it as a CFO. How much time do we devote to really this cash flow subject in an organization? Even to start us off, I want us to start with an exercise. You all have smartphones. CFOs must have smartphones. Indio? Scan that code and let's answer that question. Let's see. Which one of these 5 eats the largest slice of your week? Just be candid. Nobody will know it is you. Can you see that? 36% of the time we 36% of our time we use it to fight. Yeah? To fight fires, isn't it? And that is followed by meetings and stakeholders. 18% reporting and compliance. Budgeting and forecasting is very little. Strategic value and value creation work takes 18%. But this is very interesting. I did not expect this result, honestly. That's why I like doing this, that 36% of our time is spent, 39%, almost 40, yeah? It's actually going up, yeah? Fighting fires. And what do you guys interpret out of this? Does it intrigue you? First of all, is that we are all fighting the same fight, isn't it? Eh? Let me hear a few insights. Why is it like this? Volunteers. Today, this one, by the way, we are talking. I'm not lecturing today. Can you have a roving mic?
Yeah, that is. Yes, can I proceed? Yeah, I think we talked about it, I think, on Monday.
Yeah.
Why we have much of that is operational firefighting.
Yeah.
Is because of you expect results from the team, but you don't get the results, so you find yourself questioning why this assignment is not done on time. And again, you'll find that is you as the head of the department getting to get to small assignments for your juniors because they're not fully done to expectations. So you'll always have that kind of issues in organization. But again, is a drawback and it gives a reflection on inefficiencies and poor performance to organization.
Okay.
Yeah.
Okay. Anybody else? Let me ask the question, CFOs, the CFO role, is it an operational role or is it a strategic role? Strategic. And if it is strategic, 17%, only 17% of our time is spent doing strategic work. The rest is operational in firefighting. Does that tell us something is off, isn't it? Eh? So, and that's what that's one of the things I want us to just keep trying to unravel. This also shows that we're spending. There's another study that was done. This is very different sample, but this one showed that CFOs spend 47% of their time doing reporting and compliance. Yeah. Again, non-strategic. Huh? And the question then was, how do we move from being expensive bookkeepers to real value generators in the organization? Because when we signed up as CFO, it's a big role. We never nobody told us we'll be doing firefighting, isn't it? Huh? So, and this is what we'll be unfolding today. Every shilling left idle is an opportunity cost. Every shilling. When you're firefighting, something goes wrong with your cash flows, the cash flows of the organization. You receive 100 million shillings, goes into the bank account of your company, and you cite it tomorrow. Or even if you cite it, you do something about it tomorrow. You've lost interest for one day. Yeah? So every shilling left idle is an opportunity cost. So today I want us to build a blueprint on how to turn cash into a strategic weapon. And my expectation is by the end of today, we should come up with a cash to value action plan, each one of us. We should be able to pick 3 quick wins on our working capital. And we should also be able, after today, to go and present to our boards a pitch on how we can manage our treasury better, and also get some peer accountability. As you can see, we are all fighting the same fires. Where we are and where are we trying to move towards? the old bookkeeper kind of CFO. What is the focus of this CFO? Compliance, cost control, historical reporting. By the way, I'm a CPA. I qualified many years ago when I was still in campus. I also started my career as an accountant. And I was lost, by what it means to be an accountant. And one of the things that really stood out for me is that I would be in the office at 10 p.m. and all the sales guys are out. They've created chaos and I'm the one who is correcting the mess. And they're making more money than me. Yeah, so I was really tired of this thing called historical reporting. The role is, unless you redefine it yourself, the organization and the structures around it can reduce you to a passive scorekeeper, which you should not be. It can also make you a guardian of the past. You only tell people about what happened. Your sales guys have moved on. Yeah? So the question, and also answering the question, did we hit our numbers? When you meet the CEO, did we hit our numbers? How do we move from here to here? The chief value officer, where the focus is the future strategy. How do we create value? How do we be a catalyst for growth? Yeah? And here our role will become active strategists, not firefighters. We become architects of the future, not guardians of the past. And the question that we should be answering on a daily basis is, how can we create more value? How can we create more value? This global CFO survey showed that 72% are now expected to co-create strategy. CFOs, they're expected to co-create strategy. The imperative of East African CFO is clear: to evolve or risk being left behind. So this is the heart of today's conversation. More than even talking just about investment, here it's about your careers. Here is about redefining your role as a CFO. And there's an opportunity here: growth and capital, just the kind of FDI that we are attracting into this market. If you're driving a high value company, you're definitely positioning your company to be one of the recipients of this sort of FDI. Digital leapfrogging, mobile money penetration, the way it is, it's now exceeded 96%. We can easily now create new revenue streams. People are trading online. Yeah? So if you're punching around value, you'll find this is another area that you could easily start extracting value for your organization. Currency and risk, those are always there. Yeah? So the mindset shift, imperative. Becoming a CFO, chief value officer requires somewhat fundamental cognitive shifts. Yeah? How do you move from risk averse to opportunity focused? The people who are on the front line always tend to see CFOs as the people who are holding them back. You get it? How do we move from risk averse to opportunity focused? How do we position ourselves not like individuals who are avoiding losses at all costs, but people who are balancing risk with growth? That's key. How do we move from siloed thinking, finance as a separate function, to ecosystem view, finance as a strategic partner? We are enablers. The people who are in the front line, yeah, the people who are fighting for our business, we enable them. Yeah? How do we move from backward looking, that is reporting what has happened, to forward looking, shaping what will happen? So this is our agenda today. Let's do another interesting poll. As we are doing this, we're also understanding where we are. Let's take this poll and see what comes up. If you had to guess, where is most of your company's cash currently trapped? Very interesting, huh? Wow. Most of our cash is trapped where? Receivables. And then the second one, the second place it is trapped is where? Idle money. Wow. We are the numbers guys, eh? But our money is trapped in idle money, isn't it? Eh? So this is very interesting. And then there's another one there that it needs more time. That is other structural bottlenecks. I'm surprised there is no our money is not tied in inventory. Are we all in service, by the way? Ronald, is that the sample?
Yeah,
they are no manufacturing here.
They don't much.
Yeah? Inventory. Yes. So you guys, what does that mean? You guys are very quick to convert inventory into cash, eh? Into sales. Why is our money trapped in receivables? Government. That's one. Why is our money trapped in receivables?
I believe it's because of the structure of collections. Mostly it's left to CFOs or the finance department to collect. Yet the person who made the sale, got the commission and moved on. When you're introducing a whole new other person to come and collect, it's a whole new relationship.
Yeah.
So that's one of the struggles.
So the people who bring money in, we even pay them commission, but they don't help us to bring the money home, isn't it? Eh? That's good. Another one, I want to hear another view.
I think sometimes it's just a lack of strategy on how to collect. Most organizations don't really think seriously on collection strategy. It's not anywhere in the policy, no measures. So I think that's one of the major issues.
Yeah, you know this question that CFOs meet every day. Have you hit there? Have we hit the target? So we are more focused on hitting the revenue target rather than collecting the revenues, isn't it? Eh? When we hit the target, everybody goes to sleep. Yeah, it's like it has a numbing effect. Yeah, until you hit a cash crunch and you realize, oh my gosh, my money is actually not here. It is with our customers. Yeah.
There's a very beautiful scenario in terms of her statements about strategy.
Yeah.
I have a student in Strasbourg.
Yes.
What Strasbourg does is you are your own debt collector. Ideally, if you're getting fees, they start charging you interest.
Yes.
So
they charge you interest.
Yes.
Yes.
As a parent.
Yes.
So you start paying interest on top of what you've not paid.
Yes.
So at the end of the day,
yes.
you rush and ensure that you pay.
That you pay, yes.
Otherwise, the institution gets money out of you in terms of interest. Right?
Yes. It becomes a loan.
Oh, yes.
Yeah, but
yes.
But that is easy to handle when it's a school charging parents interest.
Yes.
So if, for example, as hospitals we are charging insurance interest for claims unpaid, the probability of them taking the whole contract out of your hand is much more easier than singular parents or singular customers.
But when you have customers that are more partnership oriented, there is a whole collaborative effort, even
Yes.
in terms of collection. We have
Yes.
targets for collection.
Yeah.
Like a 90% at our hospital target
Yeah.
for
Yeah.
our collections team. But it's a very rarely achieved target. No matter the reconciliations, no matter the conversations, but especially when you're dealing with government, I said earlier, it's more of a give or it's more take it or leave it. And if I don't have money, I don't have money to pay. So receivables, the way I see it structured, especially when it comes to government things, to be honest, there's a lot of backhand politics that has to happen, which I think most of us, especially for myself, I'm not very good at. And maybe that is something we can pick up from you guys. Yeah.
So some customers have a higher bargaining power. They have the upper hand, isn't it?
Yes.
You can't push them, isn't it? If I had someone say the other day that if you really want to take a loan, take a very big loan. Yeah? Take a very big loan. And when Dangote takes a loan and he's struggling to pay, all the banks stop whatever they are doing. They go and assist him to solve the, because if he fails, if he fails, the bank fails. So some of our customers, if they don't pay us, yeah, or if they leave us, it's too big. They're too big for us, isn't it? So there are some sensitivities. But also, it's still a challenge for CFO because we should never leave our company in a situation where our money is trapped in what? Receivables. So collection also is, it demands us to grow in a certain way that we can deal with sensitive stakeholders, isn't it? We need to know how to deal with sensitive stakeholders. You wanted to say something?
Actually, it's in relation to hospitals, receivables. I think
You work in a hospital?
Yes, I work in a hospital. So I think what is tying us is mostly the contracts.
Yes.
Because if we had done contracts whereby we say if you go beyond the agreed credit period, it will start attracting interest. I think that would have been a better bargain. Of course, the enforcement will not be easy, but at least at that point, if it's an insurance, they're likely to follow you. So I think we're just scared to make those decisions when it comes to contracts.
But contracts come directly from insurance. They won't sign them. They can't agree to sign.
Yeah. But I mean, it is one of the ways of sorting out what? Receivables. How you structure your contracts, isn't it? If your contract is open-ended, your customer can stay with your money for 180 days for nothing. You're literally financing that customer. And you're the one who is paying the cost. Yeah. So this is, that's very interesting. So, yeah.
Maybe another one that can help with receivables is invoice discounting. Invoice discounting.
Yes.
So if the banks or other capital managers like you guys
Yes.
are willing to invoice discount and
Correct.
have the debt directly from people. So like currently I know KCB Bank and the NCDC are also working on a thing that helps to collect money from like government, especially for hospitals.
Yeah.
So if that goes through, then money stops being trapped in receivables. So
Yeah.
you need to pay a small premium for them to do the debt collection for you.
Yeah. Thank you. But that is, thank you for mentioning that, because it also highlights their tools, isn't it? They are tools because maybe the guy who is buying your receivables, he's able to engage those sensitive stakeholders, isn't it? You just introduce another third party in between, yeah? And if you get just 80% of the money that you have is locked in receivables, it changes the complexion of your business. Yeah.
Thank you. I think speaking of value and just addressing the hospital CFOs here, I'll speak as a consumer of hospital. The hospitals will go and I'll be told this insurance are no longer accepted.
Yes.
Until they take care of their of the debt that we have. And that's still go to those hospitals where you even copay. You pay some premium for you to access. So probably also how what value we offer that the clients or the contractors, whether it's the insurance or whoever consuming our products, they will not want to fail. So they do not hold us hostage because of the differentiated value we offer to them. I think so.
Yeah. Okay. Thank you. I think we can conclude something. There are things or there are tools we can apply to resolve that problem. I think our biggest challenge goes back to where we started. Where do we spend most of our time? Yeah? If you're spending most of your time, if you're spending 39% of your time doing operational firefighting, then in meetings and stakeholders, and then in reporting and compliance, do you have time to collect? You see? So we are spending very little time doing strategic value work. And that's why we're having this conversation. So these are symptoms of how our role as CFOs has been captured by the system. Yeah? Is it South Africa? They said that the government is, they were calling it what? State capture, eh? Your role is under capture. So you can't even do the very things that you're supposed to do, because if the bloodline of a company is cash flow, and if our cash flows are trapped, that's a big problem. We haven't even spoken about, by the way, idle balances. Why is it that we are having a CFO forum and the second ranking thing is our cash is lying idle? You want to try?
Yes, for us, I work in a circle. So we anticipate applications, like people applying for loans. So we hold like liquidity, anticipating people to apply. Our maximum loan limit is 40 million. So we, like the high saver, we see we have 10 high savers with maybe balances above 10 million. So in case they apply, we need to disburse in time. So
liquidity.
Some cash.
So you have idle cash ready to dispatch, isn't it? Eh? Okay. Gentlemen, why will then a CFO have idle cash?
Most of this comes because of policies that the company has set. You cannot use, let's say, the whole balance.
Okay. State capture, eh?
Let's say for context, we just transitioned, so for now we don't have enough policies, because currently we might have contracts from our donors who give us probably 1 year funding. So that's why we have idle balances, because it's January, we can give it money till December. That's why.
You work in an NGO?
Yes, it's an NGO.
Okay. Wow. State capture. My friend, sema kitu ikutoke.
I don't think I'm among the cash.
Not necessarily. Why do you think?
I don't know.
Okay. That one is free. Yeah. Who wanna try? Let's try this lady.
First of all, as we don't live we are in hospitality, so we normally have a lot of projects ongoing, and also
By the way, what is idle cash? Money in the bank? Or almost earning zero. So if you're earning 2%, 3%, yeah? It's not idle. It's almost zero. That's idle. You know why? Because inflation is eating your money for free. If your money is earning below inflation, that is what? Idle money. Yeah? Yeah? Depreciating money is just idle. Idle money is depreciating, and money that is earning less than inflation is also idle. I'm just saying this for the purposes of just having uniformity in how we look at it. Yeah. We are numbers guys. So, sorry. You know, these two, when you combine these two, there is something very interesting that comes out. On one hand, our money is with our customers. On the other hand, when we receive the money, it stays idle. The two most highest ranking things. You're smiling. Yeah? What do you think about that?
Yeah, I think first of all is the lack of investment or treasury policy, where there is definition of how you're supposed to use your idle cash. Yeah, so once you have it, it doesn't lie there, you're able to invest it immediately.
Yeah. And I think that's the truth. If you don't have a plan for something, you even don't have the desire to chase it. Isn't it? Eh? And even when it comes, you don't know exactly what to do with it. You're just happy to have money in there. Because as guys, we only answer one question. Have we hit there? Have we hit the target? And the target is what? Revenue and bottom line. Top line, eh? But what really drives the business is what? It's cash flow. You can have a very high bottom line, healthy. You can have a healthy bottom line, healthy top line, but you have a cash crunch. So studies show that that is among listed firms that there is a clear, significant impact of operating cash flow on return on assets. That idle cash and that money that is trapped in receivables is hurting the return on assets in your balance sheet. It's very clear, isn't it? Eh? And also, it's very clear from listed firms, even though your firms may not be listed, that the market rewards companies with strong, recurrent, free cash flow by assigning them what? Higher valuation multiples. So if today investors show up, they want to get a piece of your business, your company will go at a lower price than it should. And guess what? Which is the first role that new investors replace? CFO. Isn't it? Eh? Why? Because one of the places our parent company is a private equity company. So we do value creation agendas. Part of that value creation agenda is to have strong influence on the CFO role, because we cannot get optimized value of a company when the CFO role is what? Is weak. So if already our money is trapped in receivables and our money is trapped in idle cash, as new investors, number one, we're going to pay less for your company. Number two, we're going to replace the CFO. Number three, this will be our agenda to create value so that we make money out of that investment. You see? So studies show that there is a 1% improvement in operating cash flow, on return on investment capital by an average of 18 basis points. Just 1% improvement in your operating cash flow, it has an impact of 18 basis points on the return on investment capital of your company. What about 2? What about 3? What about 5? What about 10%? That's exactly what investors are looking for. Your shareholders, that's what they're looking for. So, we as CFOs then must think about this thing here that we call what? Yeah? Cash conversion cycle. This thing it either masters you or you master it. It masters you or you master it. I don't have to belabor this because you guys know this more than myself. Yeah? The cash conversion cycle is simple. How much time does it take to sell our inventory? From what I've seen in this group, this is the best statistic that I will ever see. You guys, you sell instantly. You have 0 inventory. Yeah? That's very good. Number 2, how much time it takes to do what? To convert sales into cash. When you talk about, have you hit your numbers? It's normally around converting inventory into sales. But then we forget this one, the time it takes to collect cash. Yeah, the DSO. That, and then you remove the time it takes to pay your suppliers. These are your friends. These 2 are your friends. Yeah, the DIO and the DSO. Tell your neighbor, the DIO and DSO are your best friends. Your DPO will always work against you. You know, there's always assumption that if you're an accountant, that you're on top of numbers, isn't it? There's always that an assumption. But numbers do get on top of us sometimes. And I remember, there's a time I observed, I'm happy Maureen is here. In Nabo Capital, you know, we were receiving invoices and we were paying as they were coming. But our customers were paying us after 30 days. How do you think our cash conversion cycle looked? And then we have a pro fund, an in-house portfolio, which is funded from the cash flows that we generate from operations. Then I started realizing this thing is going down. And I was like, what's going on? Only to realize our DPO was faster than our DSO. Does it make sense? I am fast to be vulnerable. So it has happened even in my own farm. And it is happening in your own farms. Even though we are all certified public accountants, CPAKs. That means we need to change something. We need to be on top of this thing. When we live here, we need to have a target. Even if a 10-day reduction in our cash conversion cycle, it needs to be one of your commitments when you live here. We've already seen the picture. Yeah? You need to start saying, there are meetings I am not going to attend. Yeah? You need to start saying, there are other people who can solve problems other than myself. you cannot be the savior of the company, the only savior of your company. And when you carry other people's monkeys, because CFO role, you end up carrying other people's monkeys. When you carry other people's monkeys, somebody has to carry yours and they don't care as you. But guess what? Did you guys listen to the interview the Safaricom CEO had recently on CTA? Yeah? He said something very interesting. He said, when there's a problem with the CEO, who goes with the CEO? They must go together. Your destinies are tied. So the CFO has an impact even on the CEO's role. The CEO can be fired because of the CFO's failures. So why are we here? We are here to make sure when you go back to our offices, we shine. Okay? And we make our CEOs shine. We make our organizations shine. Because you don't want your CEO to be the one who is discovering that what? The cash conversion cycle is inverted. And he has a very expensive CFO. Si utakuwa kwa shida? Be on top of this.